Looking at the platinum to gold ratio, it's getting more and more skewed as months go by. It has been, it really hasn't been this low in any type of recent history. It's beyond anywhere what its normal ratio should be. It's quite a significant amount below the price of gold, and its rarity is much more than gold. Now, as an investment, I would definitely take platinum over gold any day. But I'd still today, with the price of silver, what it is today, I would take silver because silver can, I think it's almost a hands down guarantee that it's going to double in 2012. I mean, some people, when it's getting up around $60 or $70, they're going to be saying it's going to go to 150 or 100, or maybe it's, I don't know, maybe it could, but I think that's when the exuberance gets too high, and I don't think platinum's going to double, but I think it's going to do a lot better percentage-wise than gold. That's where we're going to see silver get ahead of gold by a great deal. The Trump coming up in this next year again. I was looking at some of the reasons why platinum has been slumping so much, and J.P. Morgan actually gives some good indications here, and also other related articles. J.P. Morgan has rung the alarm over the profitability of South Africa's platinum producers following an unprecedented slump in platinum production during October 2011. The fall in production was revealed in numbers released by Statistics South Africa on Thursday, which was earlier this December, so I'm assuming that was December 8th, 2011. And it reported a year-on-year drop in platinum group metals production of between 27% and 36%. Now remember, this area of the world is actually the largest platinum producing area in the entire world, so that's a lot on global production overall. J.P. Morgan analysts Stephen Shepard and Alan Cook said follow-up interviews with the platinum companies had confirmed a sharp acceleration in safety-related Section 54 stoppages in the Rustenburg region, and that's being enforced by the Department of Mineral Resources. So they don't want to lose miners. They probably, I don't know what was going on here locally, but I know they've been having a lot of problems with safety issues, and this has been going on for years actually. Platinum mines in the Rustenburg region on the western limb of the Bushveld complex accounted for about 80% of South Africa's total platinum group's metals production in 2010. So it is a hell of a lot of the global production, because South Africa is the biggest producer of platinum in the world. You take Russia and South Africa being a higher producer of platinum than Russia, but between those two countries, you got 80 to 85% of all the platinum in the world is produced between those two countries. It's that much. That's sometimes I think that any political event that can happen in Russia or South Africa, you wouldn't know. It would have to be something out of left field, curveball. But sometimes I think that's a good reason to always hold a little bit of platinum or palladium, because you might see a crazy number on that, and that's when you dump it. You take your fiat, or if the silver price happens to be suppressed at that time you buy your silver or whatever. This was about the 2011 platinum market trends and 2012 outlook. South African platinum miners have had a rough year. Production in the first half of 2011 was down in a large part to labor disputes, since they had such shutdowns due to that, and safety stoppages. But they managed to keep pace with the demand by drawing from existing supplies. So go figure why the price is down. Well, there is a reason for it. It's another reason, but it was another outside event that caused the price to drop. But fundamentally, the price shouldn't be down. They can't keep up with actually demand. They're pulling out of stockpiles. In October 2011, for example, an unprecedented 36% production drop was reported due to more safety stoppages, which the government has committed to continuing these safety stoppages. They're coming at a time when rising energy costs, deeper mining depths, and other problems are threatening to take a serious toll on an industry that desperately needs to start reinvesting in future production. And I do know the industry doesn't want to reinvest in the platinum mines because, from what I heard and read, that they have to turn the mines over to the local people and more control over it. And so they're not willing to put more money into it. Now, the reason everything is down on the platinum demand is because of the Japanese auto production. Normally, most auto production globally, they'll use more palladium than platinum in the catalytic converters, but the Japanese cars are more platinum dominant in the auto catalyst. So therefore, when the Japanese auto production was shut down due to the tsunami, that really affected the platinum market more than the palladium market. So they figure everything's going to come back to normal. You know, it actually probably is pretty much back to normal now, as far as production goes. And there's going to be much greater demand for platinum from Japanese automakers. The other thing is the jewelry demand. They're talking about Japan is also the second largest platinum jewelry market in the world, and sales were down because of the disaster with the earthquake and tsunami. Now, next year in 2012, that may occur again. Now, could you figure, would there be brisk sales of platinum jewelry when platinum is less than gold? I would certainly think so. I would certainly think so. So that's very bullish for this metal. And, you know, some people are buying gold right now, but I wouldn't be buying gold over. Actually, I'd be buying silver, number one. At these prices, you know, it's almost a sure bet you're going to double your money. As far as, you know, they're talking about the government tighten screws on the platinum miners, talking about Zimbabwe because they're losing out to sending materials over to South Africa. Further, the government has Zimbabwe government has no way of keeping tabs on the exact platinum produced in South Africa, taxes on estimates. I found some of this in this article kind of revealing because you really don't know what's going on in the physical market. I mean, I'll bet you there's so many ways you can be. I mean, you know, if you own the mine all the way from all operations, I mean, how would you really know what's going on as far as what's going out as an end product? I mean, you could be pulling out your profit right from the material itself, right? I mean, consuming that, you own all aspects of the mining operation and the refining operation. I'm sure there's so much stuff that goes on that's not in the numbers. And also it said in here that recently the government moved to thwart exports of raw chrome being moved out of the country, mostly by Chinese miners who bought it at very low prices. So they figured they're getting screwed on their prices. But, you know, it's always like they're always looking at the Anglo-US or England or Great Britain always doing that. But any country that gets powerful enough, they're going to do the same thing. The Chinese are going to do the same thing. So, you know, I'm not saying it's right, but I mean, you know, not necessarily that the West is the worst people in the world, because I think any country would do the same thing. That's just how it is. I did this little chart, and it was based off, this is the platinum gold ratio. Now, I had a chart here, and this was going all the way back to 2000. And the dark blue line represents the platinum gold ratio. Now, realistically speaking, you don't want to go back like a gazillion years when gold was $35 an ounce and use ratios like that. I mean, you're going back a dozen years is more realistic. So gold, actually, you know, they say the historical platinum to gold ratio is 1.4 to 1. That's what they say. I really say it's about 2 to 1. Platinum should be twice as much as gold. Some people use these statistics and say it's 30 times more rare than gold. I don't know if it's that much rare, but it is more rare than gold, and there's only a few geographical areas in the world where it's actually produced, and it's also industrial essential in many areas. But this, I could say this is really the ratio should be 2 to 1, not 1.4 to 1. But right now it's below 1 to 1. It's like 0.87, 0.88 to 1. It's ridiculously low. Even when we had this crash in late 2008, the platinum ratio was going, like you probably see here, 1 to 1. Was at 1 to 1 or 1.04 to 1. Right now, it's like 0.88, 0.87. It's ridiculously low. And to me, that's telling me industry is worse than it was in 2008 at the crash. I don't know if that's true or not, but somehow, if you're just looking at the price of this metal, you would almost think so. So, I think, now this is going back to 2008 only. And like I said, if you go back another 8 years or so, or 9 years, you'll see the ratio of platinum to gold is around 2 to 1. It drops off, and you can see it's actually lower now than it even was in 2008. So, if anybody was considering buying gold, I just wouldn't do it. But I still think silver's a better bet than platinum. But it makes you wonder what do traders think. I think they need to probably, if I could spike some stories out on Bloomberg and throw all these facts out here left and right and have a whole pile of people talking about it, yeah, I think I would buy platinum here, let it drive it up a little bit, and I'd dump it. And I think that's exactly what they do, right? But I don't have that kind of power. But I see this as a very smart buy. And when people are looking at this metal, they're saying it looks awful. It's the performance that happened in 2011. 2011 looks terrible, but I don't think that's going to have any indication of what the future performance is. History has a way of immediate history. People following curves going up a certain way or certain. It looks like this is in a downtrend, right? Well, you know what? I think it's ready for an uptrend. So, all the fundamentals as far as the supply and demand, they've been pulling out of stockpiles to meet demand, even when Japanese auto industry was down. It doesn't make any sense why this metal's so far down. And I think it's all because of psychology. And I think the psychology is heavily weighted against industry right now. This tells me that people are thinking the industry is a lot lower, and maybe they're afraid of a slowdown in China or what. But if you're just looking at the price of this metal, it doesn't make any sense why it's this low when they had to pull out of stockpiles in South Africa, all those stoppages. I mean, even with Japan having a slowdown, they still had to go pull out of their stockpile reserves to meet demand. So, something smells a little fishy with this. I kind of think there's going to be a price explosion, but I just don't think the metal's going to double, and I think silver's going to at least double. So, I would take this as a second choice right now over gold for sure.